Today's market call is presented by FactSet, financial data and analytics powered by tomorrow.
All right, welcome to Market Call. I'm Dan Nathan. That's Carter Braxton Worth of Worth Charting. Carter, welcome.
How are you? All good.
You're doing some heavy lifting this week. I was out on Tuesday. Now, Guy's out today. We've both been traveling a little bit this week.
Texas, yes.
I was in Dallas, and he's now. I'm going to dox him because he always doxes me. He's in Vegas. He's going to see Eagles tonight at the Sphere. By the way, I don't know about you guys, but as far as like the bingo card and what you had on there, Guy Adami going to the Sphere was not on my bingo card. I'll just say that right now. All right, listen, if you're watching this on YouTube and you are not subscribed to our YouTube channel, please go subscribe, leave a comment, rate it, review it, however, what you do with YouTube channels. And we have a pretty active comment section, so feel free to do that. And we're going to take some questions towards the end of the program. So Carter, we're almost done with the week, but there's a couple really big things happening in the next 24 hours. We're going to get to that. Let's throw the rundown up here. We're going to go over bank earnings. We're going to preview them a little bit, maybe give some, I don't know, like a sense on the sentiment and the setup into it. You're going to look at some charts, a really interesting thing in the BKX that you've been talking about for a few weeks now. We're also going to look at some breakout stocks. You have one in particular, interesting setup. We kind of threw a couple others in there and want to get your take on that. And then tonight, We Robot, there you go, AD. After the close, I think it's late tonight, Tesla is going to be holding their much anticipated robo taxi event. So it'll be interesting to see how that goes. And maybe we get to some audience Q&A. So throw them in here. Carter, so we always get the banks reporting first in earnings season. I'm just curious because you've been doing this for a little bit. I'm not going to kind of, maybe 20 years, maybe 25, maybe 30, who knows? But banks have always reported in the beginning of the earnings season, like I just said. Give me a sense of how you think about it. I know you look at a lot of single names, a lot of sectors. What do the banks usually, what sort of tone, in your opinion, do they set, or do they not set a tone? Is it just kind of a one-off thing? Because by next Friday, we'll probably have 65% of the BKX, or at least the large cap of the BKX reporting earnings.
Yeah, it's two things at once, right? So the results often speak to the group so that they're quite uniform. Everyone reports something that's positive in the capital markets or loan loss provisions, or all of the things go. And then every once in a while, there's one that's a real outlier, right? That's like, wow, they really blew that one, or wow, they were so much better. But in terms of the banks, what were known as the money center banks, the big heavies, that they're the transmission mechanism for the economy, right? They're the lifeblood. And so it's outsized importance. The sector overall is, financials are maybe 13% weight in the S&P. And so banks maybe half the weight of the sector, because also in the financial sector, you got things like Berkshire, you got things like MetLife and Aflac and Prudential and huge broker dealers that aren't money center banks, such as, frankly, Goldman Sachs and Morgan Stanley, or credit card companies like Visa and MasterCard, what have you. But the point is that they're outsized in terms of their importance. What is interesting, though, and you can see this every quarter, is that the implied moves are very, very small, right? Yeah. These are low beta names. And over time, banks have not been a good relative performers. The BKX index itself is below its 2009 low. The financial crisis low on a relative basis to the S&P. Highly cyclical. We haven't seen it in a while, but banks like industrials can, let's use a hypothetical, earn $8 in a year, and the next year $7, next year $6, and then 11, and then lose $4. You can lose money. People say, what do you mean? You lose money in any given year. Banks haven't done that in a while, but this is what happens when you have a highly cyclical, risk-embracing business, which is the business of lending.
Yeah.
Hard stop, right? So anyway, my own thinking here is you're not going to see that much. Let's take the biggest one, JP Morgan, which reports, of course, at the end of the week. The last 3 quarterly reports have been beats, meaning the earnings that were reported were higher than the consensus, and the stock went down each time. Down barely, 100 basis points, 150, 90. And I think you'll see that kind of thing again. Even if it's a good number and a beat or a miss, if the stock goes up, it'll be benign. And the question is, has this stock sort of stalled? Its relative performance to the S&P and to the sector is poor.
Yeah. Go back to April. If you can look at that in the middle of the chart, you see that big gap. That was very uncharacteristic. That was after their Q1 results. The stock gap down 6%. Now, obviously, it filled in that gap within a couple of weeks, and then it was consolidating. Then it made a new high, consolidated, got hit really hard on that early August move, new high. To your point, it is definitely stalled, but it's stalled above your 150 day. You know what I mean? So at least it's kind of basing. I want to go back to that XLF, and you made the point that Berkshire is the largest holding there at 13%, JP Morgan next at 9.5%. Not a bad consolidation above the prior highs, right? This one looks pretty good, but Berkshire
a lot better than JP Morgan. And if you looked at them as a ratio chart, JP Morgan's relative performance is very much in question. I mean, as being a flag, what is wrong? Yeah.
Well, let's pull up the BKX here, because that strips out Berkshire, and that is very interesting to me. That's my chart. It's just a little bit of a triangle. It basically on August 5th, it bounced off of that 150 day. It hasn't really gotten near it since then. Thoughts here, because you have your own charts, and this is one that's really interesting, especially in a year that we've seen yields go from 3.85 up to 5, back to 3.75. Now they're back above 4%. It doesn't really seem to matter where yields are, whether they're between 3.5 and 5. The bank stocks have acted pretty well in that environment.
Yeah, I mean, consensus is this breaks out, right? I mean, I can tell you that from client meetings, from both at the analyst level, the CIO level, the desk trader level, what have you. And that's both long only and long short. But here too, this doesn't have the kind of beta to break out in an important way, right? So if you just look at the implied moves, you can do it that way and back into it from the implied moves in Citi and Wells and Bank of America and JP, the four big ones. It's not likely to do, like, for instance, if this were a biotech or a small industrial, if this were a consumer name that just beat the quarter, that the kind of thing this prints 125, 120. If and as it breaks out, it's going to be, oh wow, it's 117, yawn, that kind of thing. My hunch is it's not going to do much, and if I were long this, I would sell calls. But this is how I've sort of depicted it. We can, what do we know? The point of those parallel lines is that the wipeout in 2023. Right, is the whole whatever. What is there? It was a regional bank that was in trouble. What was it?
Well, a few of them went on.
A few of them, whatever. And then the double bottom, and then you ricochet right off. So white all that out with your eye, right? Forget the whole March to October plunge and recovery. Basically, this thing has been range bound.
Yeah,
is how I would characterize it. And so now the question is, does it actually break out here? Those are very well defined tops, and if you can, we can draw it a different way, similar to your annotations. Do it a different way, pull that back. It's a great level, and the consensus is it breaks out. But I think the point I want to make is that it's not going to be an exciting breakout. It's going to be a yawn kind of breakout, more likely than not.
Yeah,
if and as it's a breakout in the first place.
So there's some interesting stuff going on under the surface. So I want to just quickly see if they can pull up. You mentioned JP Morgan. We're going to have to look at that one again. You said stall. Look at this Wells Fargo. And
worse. Much worse.
It really does. So if they pull that one up there, you see our little downtrend there. It hasn't gotten there. It's contending with your 150 day, but that one looks heavy. Pull up Citigroup really quickly. I mean, this one, again, I know this is one that some people focus on as far as valuation, but again, it's breaking out. Okay, fine a little bit, but doesn't look particularly great to me. And then Bank of America, this is one that we know that Warren Buffett has been selling, and really been sitting on this thing. And so this doesn't look particularly great, other than the fact it's held your trend line, the 150, and it's been consolidating. But to your point, if you get a breakout of this range, it's just not going to be that exciting of a trade.
Well, because every one of the four big banks, not a single one of them is at their July high. The BKX index is, because it's got broker-dealer Goldman in it. It's got broker-dealer Morgan Stanley in it, which are performing and behaving well, which nets out the weakness to some extent in the big money center banks. But the big money center banks are much more important.
Yeah. Well, here's one thing. So in Dallas over the last couple of days, I was at this it's little kind of tech conference. It wasn't broker sponsored. There was a lot of interesting folks there, a lot of VCs, a lot of big money investors, and then there was also a lot of like CEOs. Joe Tsai from Alibaba was there. Evan Spiegel from Snap, and there was a handful of others. One of the things that just this is the sort of stuff that you hear in the lobby as you're talking to people, that sort of thing. People are getting kind of geeked up about the potential for two things, right? Private equity getting in there and kind of taking some of this stuff private. Also strategic M&A, and then the IPO market. I mean, the IPO market's been dead for a couple of years. So now let's pull up Goldman Sachs. We know that Goldman Sachs and Morgan Stanley basically have their hand in almost every big IPO in the tech market here, right? And so you just mentioned, these investment banks look a lot better. Look at that right there. I mean, that's the one that you'd want to play for a breakout into year end or into the new year, in my opinion. Let's pull up Morgan Stanley for a second. It's already broken out.
Through the former highs.
Talk to me about these two, Carter, relative to the money centers.
Yeah, that's the thing. This one's making the high. And they're ones that are completely idiosyncratic, just since we're doing it. Take a look at BK. Bank of New York Mellon. So there's custody and trust banks, but look at this thing.
Yeah.
I mean, pull that back from not 1 year, but 2 years. So you'd think this was AI or tech or something. I mean, that's the thing's got almost doubled from its October. And so there's always, the thing about aggregates is it's putting a bunch of colors into a bowl and mixing it. You end up getting brown as you learn as a child. It doesn't matter. It always comes out the same, sort of the color of dirt or mud, in the sense that no one color can prevail. An aggregate, otherwise known as the BKX, has all of these things in it. And so the way to really figure it out is to try to study the individual stocks. And you see that Citi, Wells, Bank of America, JP Morgan don't act all that well.
Yeah. And so going back to your point that they don't act well, you don't expect big breakouts after the earnings. The implied moves are low single digits at best. They don't tend to move that much greater than that. And so, but you look at these, investment banks, they look kind of interesting for a sustained breakout. That would be my take. I'd prefer Goldman Sachs for the breakout. One of the things that I would say about the money centers is if you own them, selling out of the money calls would make some sense in this environment here, especially if you're not considering, a better than expected move. And the flip side of that is we know that options premiums get pumped up in front of earnings events like this. All right, I want to hit another sort of breakout sector. I know that this is a group that you've been kind of focused on playing for the breakout. This would be software. This would be the IGV. And this is an interesting one. Very long base, a lot of volatility in that base, but you finally got a breakout here. Thoughts on this? And I'm going to hit you with a few names that are not going to break out anytime soon. They're way off of their highs, but they're in this index and they might play some catch up. Thoughts on the IGV here now that we finally have the breakout, Carter?
Yeah, so we put out a note if you want to pull up CIBR, cyber. These are cyber securities. It's this, but better to my eye. And so it's trying to catch an aggregation of stocks that it's an ETF and you can trade it, but really taking out those highs with authority. It's very similar to the IGV, but a bit more torque, a bit more beta. But either way, this is up and out, and I would press the longs here, get bigger.
Yeah, what I like about the cyber is that, we talk about ETFs and the construction of them. The largest holding here is Broadcom, right? So it's thinking about what are some of the components that go into the companies that are actually offering these cybersecurity. So then you have CrowdStrike as the number two. We know what happened to CrowdStrike with that. They had a bit of a security issue a couple months ago. Cisco Systems, this is probably not one on its own, Carter, that you'd be that interested in, but as part of the aggregate, maybe it plays some catch up. Palo Alto, Zscaler's had a bit of a move recently. So again, I think it's interesting, the cyber. Back to the IGV for a second, though. There's a couple names that are in this thing, and we've been talking about some of these enterprise software names that have really lagged the names that have benefited from generative AI. Let's pull up. This is an interesting one. Okay, so let's go to ServiceNow. This one has broken out, right? It kind of rechecked back to that breakout, and here you go again. It's about to make a new high. I have to assume that this is a chart that you like, or and maybe not, maybe, but my point is, it's like done all the things that you would have expected it to do on a breakout.
Yeah, and so it's what a hold is, right? It's not at a level where it's about to inflect, breakout. That happened
Yep.
4, 5, 6 weeks ago. And what a hold on Wall Street is sell. And I mean hold. If you have it, you hold it.
Yep.
And one could say, but if I don't own it, what to do? Okay, buy some, buy a little bit. But the idea is to find something that is just breaking out or hasn't yet. So this, for instance, versus cyber or GV, I'd rather do those. They presumptively play catch up with this.
All right, so I'm going to hit you with a couple software names that I think are really interesting. So here's Workday, and this is a name that, for historically has been kind of lumped together with ServiceNow from a multiple perspective, some of the competition, some of their customers and the like here. So look at this one. Every other quarter, gap, 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 right? So gap up, then gap down, then gap up, so it's filling in these gaps. When you look at this one, Workday right now, okay, and you say, okay, it's been tracking your 150. It filled in that gap from earnings. It just made a 52-week low. What do you think about this one playing for, I guess, a move back maybe towards 270 or something like that, and kind of getting back towards those prior highs?
Yeah, I'd play for bounce here. So it's a nice, quiet give back post news related up thrust and gap. And I would think you get 275 to 280.
Okay. And then here's another one. This is Adobe. Okay. Still down on the year. Doesn't look too different here, right? So thoughts on Adobe, because this is a company that was trading much better in the summer of 2023 when the company was kind of articulating what their generative AI strategy was going to be within some of their product suites and the like here, but it's kind of been left in the dead. Does this look very similar to you than the Workday?
Workday's better, but this is the difference is this recently is fresh off unhappy news.
Yeah.
Drop in gap in September. Workday doesn't have that. This is not as good at all by my work.
Okay, so let's talk about your thoughts on yields here. We had this CPI data out this morning. It was slightly hotter than expected. One of the trends has been like just the kind of walking down little by little, right?
Mm-hmm.
This CPI report. So here it is. The expectations were for 3.2% year over year. It came in at 3.3. The survey month over month was 0.2. It came in at 0.3, right? So these are not meaningful moves other than the direction, that some people, I guess, have been focused on. So when you think about that, you've been playing here you go. Here's a note that you had out there. So talk to us about TLT. This is the 20-year U.S. Treasury bond ETF. If you're playing for a little bit of a breakout here, or not a breakout, excuse me, that was the yield, but this would be a bounce off of that uptrend that it's just held like a boss here. So talk to us a little bit about what you're thinking.
Yeah, I mean, so it's just a fairly mature intermediate decline in terms of not 2 days or 10 or 12. You got almost 3 weeks here of selling, which is to say almost 3 weeks of backing up in yield. And you can see, of course, that they're the reciprocal of one another. So this is a sell-off to a level of support, what I would anticipate some sort of bounce for a trade. And then if we look at the yield chart, of course, the idea is that yields have moved up aggressively. You're talking about 3.6 to 4.05. And my thinking is they're getting stretched, right? A lot has been priced in, or if you will, or rates have backed up substantially to the point where the rate at which they've backed up is not likely to continue. So I'm a buyer of bonds here. If you have a futures account in Chicago, if not, using TLT, the ETF, for a presumptive bounce.
All right. So one question here. This note was out yesterday. Is that correct?
Mm-hmm.
Okay. So let's pull up, the TLT today. All right. So if we were to pull it up with the 150-day, and you've made this point all the time, if I look and see where this is trading right now, it got below that uptrend. This is today, below that 150, but here it is right now. It's basically trading right there. Okay. So like basically the range on today, Talk to our viewer a little bit about, you always say this is not always that precise, right, of an undertaking, but when you think about the little bit of the piercing below that uptrend, you can kind of see it with your eyes, and below that 150 that's basically flattened out a little bit. Does that change your mind at all? Just a 1-day sort of action that we've seen?
No, that's all too granular. If we pulled this back from 2 years to 3, if we can do that, you'll see that what this is essentially is a bearish to bullish reversal, something that's been in a long and protracted decline that is in the process bottoming, finding its footing. This is a critical level. A whole lot of further weakness from here would undermine the premise that it is in fact bottoming, but that's my view, and hence the no declines to play for a bounce.
Yeah, and we'll take a look at this maybe early next week and kind of detail an options trade that kind of lines up with Carter's thinking here about playing for a bounce, doing it with defined risk, maybe kind of focusing on that prior high where you could kind of get back to. So maybe it's a call or a call spread. So we'll talk about that a little bit. One of the things I'll just mention is that we've been highlighting the fact with the S&P very near, the all-time highs, or just made a new one earlier in the week. We have a VIX that's above 20, a VIX that's 21. Applied volatility near term in the TLT, and this is generally a very low vol instrument, is basically getting up to 19, like that. That's not something you see too often in a way, especially when you think about the relationship of equities versus yields and the like here. So that's one we'll keep an eye on. One last thing, as we're talking about yields and your view that they go lower, let's look at the Verizon, and I think this is one that you focused on. Am I correct? Playing for a breakout not too long ago.
Yep.
So look at this one. You got the breakout. It's checked back. This is also an example of one that's below, and maybe that's a fairly precise sort of breakout level here. But here we are at 43. We're right on that line. Thoughts on these telcos that obviously usually do well when you have a lower yield environment because of their high yield?
That's right. They're just bonds. That's all. They're highly indebted companies. I think AT&T is the most indebted company in the world, and yet as recently as 7, 8, 9 years ago, it was also the second most profitable after AT&T, after Apple. Excuse me. That's not the case anymore. But if one knows what it is, and that's all it is, it's a bond. Then is this dip to a level of support something to take advantage of? I would. I like them both. The two, AT&T is a bit steeper, and so in that sense, I like Verizon here. But I think it belongs in a portfolio for those who construct portfolios rather than just trade, and own it and ride the ride.
Yeah, and really quickly, we have an AT&T chart to your point about the steepness. When it broke out above that uptrend line that's been in place, that was a big move for an AT&T, like to move in that fashion. So again, on a relative basis, it might look or act a bit better than Verizon. But if this thing were to kind of pull back towards that kind of breakout level, that uptrend that's been in place, you have a move, back to 20 or so. So again, I see what you see as far as the Verizon is concerned. All right, here's another one. We've spent a lot of time on this. So tonight, and I think it is later tonight, that Tesla's holding this robo-taxi event. This was an event that was supposed to happen in the summer. They pushed it out to today. The stock, after you see that it ran into its earnings, this is in mid-July into late July. They had the gap after the earnings. The stock kept on going lower, and then you see that move into early, August 5th. It kind of did what a lot of stocks did, or most stocks did. It had a huge reversal day, opened on the low, closed on the high, kind of consolidated around there, and has had this epic move, right? If you look at this from 200 to almost 260 or something like that, it's pulled back here. The sentiment got really geeked up about this event. What is a robo-taxi? Well, the company's been talking about creating this fleet of EVs that ultimately will be autonomous, right? And so it's going to be a competitor to Uber. We know that Google's Waymo is already out there. I've been in them. They're absolutely amazing. But the one thing about Tesla, as you know, Carter, is like Elon Musk throws a lot of dates out there. He throws a lot of ambitious sort of goals about when they're going to deliver, whether it be a car or a service like that. And usually they fall pretty flat on the timing of that. So the stock rallying into this, I think, is kind of interesting. I suspect It's a sell on the event if it was only a robo-taxi announcement. If they put a prototype out there and they say, we're going to have these on the road within a year or something like that, that's not happening. But the other piece of news that some are expecting is a lower end EV, something that comes in at that like sort of $25,000 range. We know that they have a lot of competition from China that's in China, but also in Europe and other parts, not here in the US. So to compete, they need a much lower end car. Thoughts here on the setup into tomorrow. The implied move is 6%, Carter, in either direction. That looks like something that investors, or at least option market makers, are pricing to the tune of an earnings event.
Right. So a couple of things. The first, of course, premise of studying price is that one, and this is the case for me, and it doesn't have to be the case for anybody else, but that one is not aware, and I'm not until you said it now, that there's some event. In fact, if I didn't see it here, robo-taxi, betting, Tesla's future, because I can read it, I wouldn't know. And that's the point. So if one can sort of disassociate from that news and then do further, take the word Tesla out of the mind and just stare at the lines, the price action, this is a pair of twos. There is nothing here. It is not bearish. It is not bullish. That doesn't mean it can't go to 300 tomorrow or 100. But the point is there is no level. There is no setup. There is no key moment, at least in the chart, that's discernible. It might be a huge moment tomorrow, down or up, but the chart is what a pair of twos is. And the point of that designation is in poker, the real trick is to not bet.
Yeah.
You fold, you fold, you fold, you lose your ante, you don't put money. And when you have a big hand, you bet big. This is a pair of twos for lack of any other designation. Not a hold. That means why bet something that's the smallest hand you can have without having 5 random cards? Pair of twos for me.
Yeah, what I find interesting about Tesla here is that it got back up to into their earnings event in late July, early August, or late July, I guess it was. It got back up to that prior 52-week high from December. It failed there in a big, big way. And then it got back towards that breakout level from late June, early July, and it had a big rally there into this event. So expectations have been high. But then if you look over the last week or so, you've had traders or investors kind of coming out of this. It had this huge run, right? From $180, $190 up till $260. So to me, the way market makers are pricing this, I find it really interesting. I find the sentiment, which was red hot and then got a little bit cooler. So again, I'm pretty interested to see what happens here. All right, let's get to a name on Worth Charting. And by the way, people, if you want these trade ideas, Carter's Find, work in your inbox, you know where to go. It's worthcharting.com. Look at that. Look at that old-fashioned technical analysis, nothing slick, just charts. Go check it out because it's great, great work. We get to kind of highlight some of his work here, but this was one that you had out today. Okay. And again, there's lots and lots of these emails that go out. We have the benefit or the nice ability to kind of highlight a couple of these a week here. So talk to me about Uber. This is one where you want to press the bet to the upside.
Yeah. And so this is, as depicted here, this is the exact rendering of the note that went out to Worth Charting subscribers, simply saying, as titled, press the bet. And it's a follow-up, right, to a report you see there from exactly 3 months ago, July 12. Here we are, call it October 12. It's the 10th, but basically 90 days ago. The judgment then was to play Uber for a breakout, and we just wanted to make that case again. Yes, Uber has done well. You can see up 7 versus the S&P versus the NASDAQ, but it's actually lagging its sector, right? So it's way behind. Not way behind, but way behind the industrial sector, and it's the 4th largest constituent. I guess you got GE in there and some others that are bigger. But the point is, this is a nice moment. Let's look at the chart and maybe we can try to figure out the way forward. And so, look, this is one man's judgment. This is what I see, and the point is, you can put lines to make any case. One could say that's a big rolling top. It's about to hit its head here. It's been here 5 times to the penny, to the penny. It's going to fail again. Listen, this is what makes markets. But what is important is that it's due for something now. It's been coiling, if you will, while wide ranging for now almost 10 months since the January. And so something is likely to give. Either Uber really did peak in January of this year and it's going to fall apart here and ultimately go lower, or Uber, having had a huge run into the January high, is fully rested now. 8-9 months later, and is going to now reassert itself to the upside. That's my judgment. The latter, the green arrow, of course, reflects that. And I think one wants to play long here, playing for, we have sort of 88 as a price objective. It's trading at 78 now.
Yeah. What's interesting about this one and the timing, again with the Tesla robo-taxi event tonight, okay, is that Uber has partnered with Google's Waymo to basically, if you are in one of the cities where Waymo is offered, and they're going to Phoenix and Atlanta, I think over the next 6 months or a year. Right now, they're in a few markets. San Francisco is probably the largest one. So you can go on the Uber app and you can call up a Waymo, autonomous car, which I think is pretty interesting. So again, what Tesla has to offer, what their roadmap is, what the cars that they're offering, how you will access them, that's going to be a huge impact on this Uber strategy. So to me, I think it's very interesting, because let's just say investors are not placing a lot of optimism about the timing of whatever Tesla puts out there tonight and the vehicles that they do and how you're going to access it. Uber could move one way or another. Okay, one other that I want to say, if you're pressing the bet in Uber to the upside, let's pull up Lyft for a second. And this one has been an absolute disaster. It's bounced off of that 52-week low, but here it is now. And I'm curious, thoughts here, and I'm going to pull up a 5-year really quickly. If this is one that you are bearish on the fundamentals, Carter, would you be pressing the bet in this one to the downside? Or is it a bit dangerous when you consider just the enterprise value of this name? And we just talked about the sort of partnerships that are happening. Maybe some larger entity sees this as probably a decent way to kind of leverage some of the existing technology, the existing data, to actually create a service as it relates to robo-taxis.
Right. With knowing nothing at all, other than I've been in a Lyft and I've been in an Uber. As an operating business, something's wrong, right? Price momentum tells us, price action, that, imagine sitting here at 2 and 3 year lows. And so the question is the upside dependent on some sort of, as you implied, maybe other player buying them out? This is the kind of thing where, what's the debt load? It's probably getting worse. You can look at, they're probably dilute and sell more shares, but something can't be right. So I wouldn't want to be long. And the question is then, do you retain a short or initiate a short in something like this, playing for yet further weakness? That's aggressive. I would do it small.
Yeah. Okay. So it's interesting. And the reason I just bring that up is pressing the bet to the upside, pressing the bet to the downside in a very similar name, but different market share and a different set of circumstances altogether. We want to hit the insurance stocks and some of the expectations into this storm. But I first want to pull up to kind of set the stage here, Nvidia. And when you look at this, and one of the reasons why Nvidia caught my eye today is AMD has this advancing AI event going on right now. If we can look at Nvidia here, this is almost back towards its prior highs. Some investors were getting excited about what AMD might have to offer, but look at this in Nvidia. And then I'm going to kind of just go through some of the call activity, Carter. These are some of the most active calls in single stock land today. And I looked at this about 45 minutes ago. The call volume today was 2 times that of puts. There was 143,000 of the October 24th, 135 calls that have traded, and 112,000 of the October 24th, 134 calls. And then there were some 133s and 132s. This doesn't mean they're all being bought. Okay. But a lot of these were opening sort of trades here. So at least that volume has caught my eye. You see the move. It bounced off your 150 day. It's gotten back towards that closing high. Thoughts here on Nvidia? I know this is one we talked to death here, but given the call volume in AMD's event today, I just think it's worth looking at.
So those October 135s, that's basically at the money. What are people paying for those? What are those trading at?
Yeah, they're playing a few bucks. No, they're pretty meaty here, man.
Interesting. presumption is it makes a run for that high. You're basically free and clear. You don't have any overhead supply. And so it's just a question of how high it can go. But being short here would be risky, dangerous.
Yeah, no doubt. I just want to pull up a 5-year chart, and I want the viewer to kind of remember what this looks like. Today, it's, on the year, it's up 170%. You get it. Look at that right here, and just remember the look of that chart. Now, real quickly, let's go to the AMD. Let's see if we can do a 2 or 3 day chart. They had this event. There was a lot of anticipation about it. Some of the kind of targets that the CEO, Lisa Su, laid out, they must not have been to where some investors were expecting. So you see that sell off as soon as some of the numbers in the some of the metrics that they're focused on came out. They talk about addressable market all the time. She's been talking about it. They just don't have a product that's competing right now that NVIDIA customers feel safe to have a second source. Now let's pull up a 1 year of the AMD really quickly. And I just think this is kind of important here, is that, this thing's kind of stuck. It did almost a round trip of most of that move here. Thoughts real quickly, Carter, on AMD, because not some of the same enthusiasm that you're seeing in NVIDIA.
Stuck is it. That's the word. And that's what a pair of twos is. It's always tempting to see something, to make a bet, but it's usually better, unless it's a clearly defined circumstance, to just not do it.
Yeah. And again, all right, let's flash that 5-year NVIDIA, and we're going to move on to the next thing, the last topic, really quickly. So this is the thing I wanted you guys to remember on a 5-year basis. Okay. Now, let's talk about some of these insurance stocks. These are not small market caps. Okay. And, we had this storm, Milton, which was a category 5. When it hit land, I think on the west coast of Florida, it was already down to a category 3. We know that we had the devastation of Helene. And again, we know that there's been massive disruption, and there's been deaths, and we're not meaning to kind of talk about this in any way that looks to be profiteering or anything like that. We hope that all these folks are safe and they get rebuilt and, bigger and better. So hopefully our hearts go out to those folks. But look at the moves that we've seen in some of these insurance companies, right? And so one of the things that I think a lot of insurance companies, maybe they get tagged into these sort of events, the stocks do, because of the fear of what they end up paying out, right? But a lot of times these companies end up raising insurance rates after these sorts of events. So you see the price action today. It's kind of telling you that, folks are a bit relieved about the damage and that sort of thing. Look at the year-to-date action, though, in these. And I think it's interesting. Now, let's pull up some 5-year charts of these. Well, Carter, tell me what they look like to you once we start scrolling. You think there's some big generative AI strategy?
Very steep, and yeah.
Look at that. I mean, look at these, and maybe Amanda can kind of scroll through those. That's Progressive. This one you see is Allstate, right? Look at these on a 5-year basis. I think we have a few more here. So thoughts on these names after this crazy price action? We know that there's been a lot of news in and around them. Some are a bit more constructive than the others. That Progressive looked a bit steep and that sort of thing, and uncorrected. Thoughts on this space really quickly?
Yeah, I mean, it's been huge. If you look at the single best performer, let's do Progressive, PGR, just to make a point, independent of what sort of, and you pull that back, do that. You can see this thing is, but that's 75 to 250, just 100 to 2, almost 0. But do a 10-year and do a 20-year, just to make a point. This is, Morgan Stanley is only slightly above where it was in the year 2000.
Yeah.
The Mary Meeker peak, and 24 years later. These are very reliable businesses. There's a reason that Warren Buffett is in this line of work. And so the question is, do they get ahead of themselves over time? Sometimes, but you can do the same kind of thing with the Chubb. Let's do Chubb, for instance, one of the ones that was on your table there. Just do a long term of Chubb. These are basically long-term compounders. And so independent of, and that's only back to 2010. If you did that at 30 years, you'd see the same thing. These are very astute operators in terms of, they have huge bond portfolios. They don't have the cyclicality of a money center bank or a broker dealer. And in many ways, it's a stealth way to play financials without the idiosyncratic risk of being in whether it's a small broker deal like a Raymond James or Jefferies or Piper. These are very good businesses. And there's a reason, if you think about why. No one It's the only thing in the world where you have a product and someone pays for it, and very often you never have to deliver the product.
Yeah.
Never deliver. No one actually gets insurance and then stands in the front of their property and staring at their house and says, "Burn, baby, burn."
Yeah.
No one actually wants to take the product. And so insurance, the British invented it. It's a very good business.
Yeah. All right. And so let's take a couple quick questions. I know you got to get out of here. I got to get out of here. This is from Wavy McFly. Question for Carter. Which part of the energy complex would you invest in today? Pipelines, midstream, I mean, listen, let's pull up the XLE here and we can just look at it through the lens of these two ETFs and the OIH. Thoughts on here, Guy has liked the Exxon playing for Breakout. I think you've liked the Exxon. It's been some divergent price action between Chevron here, and maybe we can pull up OIH. These are the oil drillers. Just thoughts on the space and maybe how you'd be playing it right here.
Right. So the XLE in and of itself, pair of twos, the two that are sort of recently published on, we like a lot. Let's start with Exxon. We'll do a 5-year chart just to put in context what this is. So off the COVID low, one of the best performing stocks, and now 3 years, 2 years sideways, playing for the breakout. The other is LNG. Stands for liquid natural gas. But the point is, if you do the same 5-year, it's the same circumstance, a great run up, big consolidation, and now just starting to take out its highs. We like this a lot.
Okay. Here's a question on Merck. This is from Chris E. Merck looking mighty fine here, loading into a loading zone between 100 and 110. What do you guys think? He says the only way I can justify the decline is healthcare out of favor and election year. So thoughts on the Merck here? We can pull this on up really quickly. We know that they had that huge move down from 125 below 115. It rallied back a little bit. Let's look at a 1 year really quickly. Rallied back a little bit and now has made a new 2-month low or something. Thoughts on the way that Chris E described what he's looking at and why he thinks the weakness, and maybe you can just give us a quick sense on the chart here, Carter.
Yeah, it's very poor relative performance to the market, very poor relative performance to other major drug companies and to the healthcare sector, XLV overall. The price volume correlation is bearish, and I typically don't want to embrace something that acts like that. There's a old-time technical expression that the stock acts poorly. Now people hate that. They're like, "What? I go to meetings last 32 years. What do you mean acts? Why are you personifying the stock? It doesn't act." But it's exactly what people get it when you talk about a pitcher. They're like, "Get him out. He should not have thrown that ball. Out. Next guy in." It acts poorly. If you're a professional baseball player, you can put that ball anywhere in the box. You did 2 in the wrong spot and they hit a double and a triple. Something must be wrong. You're thinking about your wife, or maybe you're thinking about your mortgage. The point is, the guy shouldn't have done that. He's a pro. The point is, a stock does act well or act poorly. This acts poorly. I don't want to buy stocks that act poorly.
I say stuff like that all the time, as you know. All right, here's one, and we get this question over and over again. This is from Scott A. And here it's Boeing. Like, he wants your take on this, Carter. And I'll just say 2 things. We talk about this name for some reason on Fast Money, because I feel like every week we spend some time on it because there's just one bad news story after another, and my take all the time is like, listen, there's a lot of stocks out there, man. Like, you don't have to trade this one, or you don't have to be averaging down for an investment. So thoughts here, because again, I think this falls into the category that you just mentioned, acts poorly. This thing acts like grim death.
Yeah, it's just a weak stock in an established downtrend. There's no technique known to buy stocks generally in downtrends. If a downtrend's starting to stop, basic bottoming, a bearish to bullish reversal buy, that's something else. Now, one could say yes, but at some point, Boeing is not ever going to be a new aircraft manufacturer, the Carter and Dan manufacturing. Of course, the government will support it. This is ultra true. We will never go out of business. This we know. But that's not a premise. That's not a thesis. It's just stay away.
Yeah. All right. Last one. And this one is actually very interesting to me because, again, it kind of falls into your cyber trade that we started talking about, that ETF. So this is, let me just say, this is from, let me find it one more second here. This is from Comp SPX One, please take a look at, oh, this is different. Please take a look at Moderna. I screwed that up. So let's just do Moderna for a second here. Is it a soft buy, Carter? Soft
I don't know
buy.
what that is. Maybe you mean a small buy or just a gamble? Take a bet.
Let's assume that it's a small buy, but I think this is going to fall into a category that we were just talking about a couple.
Yeah. I mean, if you just do this on the 5-year to pull up the COVID run up and then the whole thing, I mean, there were articles being written about this company that it was going to be worth $1 trillion. It was going to be the largest healthcare company in the world. I mean, suspend what you think. Maybe you just got a new COVID shot. I mean, why buy that pattern?
Yeah.
I know no reason to.
Yeah, one thing I'd say, and again, maybe the IP is worth something. Maybe, we were talking about this mRNA technology and how it could be applied to so many other drugs. I think this company sold a bunch of stock when it was on its way up. A third of its $22 billion market cap, or a little more, is in cash. That's net of like $1.3 billion in debt. So maybe there's an acquisition on the offering, or maybe it gets acquired. Sometimes companies, if there's IP and you got all that cash, even though they're losing money, this company is expected to lose, I don't know, $3.5 billion. So they're eating through a lot of that cash. So that's the only thing that I might suggest might be worth a look. All right, last one. This is from AY Space S. Can the gents please look at Palo Alto? That's PANW. Is it a buy if breaking out above 380? Thoughts there, Carter? We'll pull it up for you here. Again, it's part of the theme that you talked about, but one of the reasons sometimes we like these sector ETFs is that you don't have the idiosyncratic risk of one stock, as this is probably 4 or 5% of that ETF. You go back and you look from earlier this year, you see a gap like that after a huge run, you're going to have to take a double look, maybe a triple look at why that happened, and are a lot of those ills that cause that sort of move from a fundamental basis, have they been cured?
Large long for me, if you have it, I would double it.
Oh, wow. All right.
Involved, I would get involved. If you pull this back and do a 3-year to put in perspective the current price action, what you'll see is, or even more, let's do 5, that this has obviously been a great winner. And now, having basically done nothing the entire year, I would play for the breakout and I can get in motion right here.
All right, my man. Well, listen, we really appreciate all the time you spent with us, especially this week doing some heavy lifting. Hey, listen, if you guys like his work, go to worthcharting.com. One of the things I'll just say really quickly, he's got a lot of people like you who are really interested in single names, whether they're trading, whether they're using technicals as an indicator, whether it helps them in their investment process. But he also talks to some of the biggest money managers out there. He gets a lot of feedback on the work that he does. And I just think it's great, great work. That's one of the reasons why we are so happy to have him here. So Carter, thanks so much. Hey, listen, if you're here, people, and you are watching this on the YouTube and you have not subscribed yet, go do that. Subscribe, share it with friends. We want to get to 100,000 subscribers. I think we're over 90,000, but we want to get there by the end of the year. Help us do that. We appreciate it. All right. We will be back on Monday, a very special edition of Market Call on Monday, but we have a great on the tape podcast with Anastasia Amoroso. That drops tomorrow morning. Danny Moses and I are going to kind of wrap up all the bank earnings and the Tesla robo-taxi event. So we're going to record that tomorrow morning. So please go follow us on the podcast stores there. All right, Carter, thanks so much. Have a great weekend, everyone.
Bye.